Hi, g'day traders, Sam here from T2P. But today is Sunday the 22nd. In this exercise, oh no, sorry, not in this exercise, in this video, I'll be talking about Bitcoin, and I'll be talking to you about this chart on my left and why these levels are of significance in terms of targets and trading opportunities and potentially the bottom of the market. But that is very difficult to say. But what I'm going to do is present you with basic technical a technical approach to charts, what we see in confluence and what makes sense. I won't go into too much detail about other charts, but there is one or two charts I might just quickly dab over and how they align with my analysis with Elliott Waves and Fibonacci. So that's on my left. It's already done. What I'm going to do is on my right, I'm going to explain how I get there. Now, on my left is Bitfinex because it's got the history. Not every exchange price action is aligned. You'll see some are slightly further than the others in Fibonacci perspective, but we'll make the attempt to explain the charts away. So let's begin. On my left, it's a daily Bitfinex chart, and on my right we have Bybit, which Bybit is really good for trading because it actually hits technical attributes of the chart more so than others. So for instance, what I'll do is we've got a measured move here to this bottom here on my left. So let's just go in closely. And I'm going to show you how I get there. And so, yeah, it could be a lesson for you as well in how you approach charts. So price comes down, finds support, capitulation, and then we find this nice bounce, and then we get this bear flag. When we see a grind, so it's a lesson for you. When we see a grind like that, and we don't break any key levels, you see what happens. That's a triangle, and then we drop. And then obviously there's trading opportunities there. I won't go into the trading opportunities. I'll just talk about levels. This is my Elliott Wave 1 count. This is my Elliott Wave 2 count. Now, from experience, from other chart analysis, I worked out that when you do a fib extension to the 1.618, that usually is wave 3. It could be an ABC move, a deep one. Ideally, you want it to be 1-to-1. So we see that works out, but it didn't work out much. So if it was an ABC move, that was a good entry. However, we're thinking it's the top of the market. So we're staying the bear market, and that's why it didn't hold. So what we do is we show you here on the right, fib extension to the pivot point, and there. Now you see in this particular exercise, if I show you this fib extension, we're in a regular chart, so it makes sense that on the right we're going to be on a regular chart. We don't get it. We don't get the 1.618 exactly. Well, with this one we do, but Binance we don't. So it would have been a hard trade. Now we can probably look at other charts, but we're going to make the assumption that this was the target right there. We didn't quite get there. However, if we were to see, we're getting that wicks. The wicks play with the results. We can go for the second one, and the second one, just a bit more. It's perfect, 1.618. So that is the method that I use. At times I use the full candle that's done it, and then I'll look for the second one. And if it makes sense, we use it. What we look for is confluence, and sure enough, if this was 1.618, you can see the fib extension 1 is our resistance. Very similar to this. So we're on target. So far, that is our 1, 2, 3. Just like that. Let's just clear this out. Now moving on to the next level. So if that's our wave 3, that is going to definitely be our wave 4. So we've got a strong move. So we have a measured move from there to there. And in many cases, we get a 1-to-1 from there to there, and from there to there. That's our 1-to-1 level. So AB equals CD. That happens often with corrective waves. So you get this A, B, C, a zigzag with Elliott wave, and that is usually a good position to buy. Sometimes it's very predictable and price goes further down just to shake people out, but it goes back up. So I'm mindful of that, and you can look at the values here, right? So what we do is, all right, if that is wave 1, 2, 3, how do we get wave 5? We use wave 4. So just like here, that's our wave 4. We're going to apply a fib extension to wave 1, which is that one there, and to wave 4. And you can see, give or take, it's a 1.618. And here, yeah, we've got the wicks, don't have to be perfect. We've got the same here. This one's a bit short, this one's a bit long, fine. So that becomes wave 5. And that is our wave 5 here in red. On the macro, that becomes wave 3. So if this is a 1, 2, this is a strong move to the downside. So because it becomes a wave 3. And then becomes looking for wave 4. Now, if you see my chart on the left, we have this so far established trend line. It not necessarily is the one, because trend lines can be the ones that fit most comfortable. And so if we try to look at this trend line here as well, it does fit a bit. Like we don't use that, we use that point, and it surely does. So sometimes the one that you think is going to take place, not necessarily, it's a secondary one. Because what happens in channels, you have, not just channels, in many tools, you have deviation to the 1 level degree or 2 level. So you could say this is a deviation to the 1 level with this trend line. And that's pretty much it. We've talked about this in our previous video. Price is there, that's liquidity. So this is a fake out, takes it out and then drops. We said the same here in our video, and we expected that. And we had the anchored VWAP to align with this, and that's why price dropped. I am bearish here. So far we got that type of triangle. It's amazing that it's actually playing out. People thought, nah, be bullish. No, we were bearish, and we have our levels of confirmation. The other one is, if price does say, if this does come back up, I would expect that to be shorted. So I'm giving you the trading tips here. That is a good strong position to short for a number of reasons, but I won't go into it. But if this goes out and grabs slightly more liquidity from this one, that trend line is going to be a strong resistance. And but then we use that fib level. For now, we're making the assumption that the Fibonacci is at this level. All right. If this was a strong move and it went up there, then we have to move that fib level there. Okay. So back to this. We got our 1.618, and you can see this position confirms it. So now we got wave 5. Like I said here, on the macro, wave 3 becomes wave 5. Sorry, wave 5 becomes wave 3. And if that's wave 3, that becomes wave 4. And now we're calling wave 5. Now, here's the thing. If that's a measured move, so wave 1, we look for wave 1 to 1 here. And if it's slightly higher, you can see that is the band that I'm looking at. And therefore, if we use our Fibonacci, like I said here, it's so far being aligned. What we do is, okay, like we just did it here, 1 to 4. Now, this is our 4. So we go to our 1 here, and we go to our wave 4. And it's roughly about 54K. All right. If it's slightly higher, then we move this higher. And then we get it slightly higher. But at the moment, that wick is there. And we are comfortable that this could be the measured move. And that's because of this length. That length equals that length. And that's the Fibonacci of 1. We can measure it just like this, P, with the pink. We've got the same length. If, like I said, if price was to go slightly higher, we move this slightly higher, and that could be our target there. But for now, we said maybe that would be the case. So it's at 52 here. 53 there, 54 there. All right, if it's 1-to-1. Now the wicks give you the variation, so maybe we can do this here, and you can see it come down to 52. You can't say which one's going to be, but for now, that's what it is. So it's aligned. You can see how that wave 5 is aligned. It also matches our A, B equals C, D. Perfect. So it's a strong case that that is going to be wave 5. If, however, the market dumps big time, then we go to another scenario. So what we're going to do is we're going to look for support here and the response. So we'll be looking to just the way, depends the way it comes down, I suppose. If this capitulates and goes further down, then we've got the 1.618 and that here. So it will an extended wave 5. When we have, in general terms, when we have wave 1, 2, and we get wave 2 and wave 3 equals 1.618, or in many cases 1.786, we tend to look for 1-to-1. In my experience, what I mean is wave 1 equals wave 5. If we get 1.618 or 1.786 as wave 3. And in this case, we've got AB equals CD. That makes it more of a reason why it's going to be there, and it fits into the other rule that I have. However, things can change. Market conditions could push it much further down. Now, why am I saying focus on this? There is charts, and if you look at the Powell law, and I'll bring out that chart for now, and I'll show you why that I think this is a good level. 54 to 55 is my Powell law level of support. I'll bring this chart and show you. Powell law Bitcoin. This is a good chart. So if we look at this tool, they've implemented the Powell law indicator. There's a whole bunch of them. You can see the Powell law. Basically, there's a formula. I'm not going to go into it, but you can look it up yourself. And it jots the chart. We can look at Powell law with the trading view chart, but I prefer these ones because they're more reliable, I believe, because they make a fair bit of effort to stick to that rule. And so when you look at this, unfortunately, when we do that, you can see that it's got a bit more to go. You can see the resistance level is playing really nice for the top. And the band, so if this was to keep going sideways for a long time, the bottom actually goes a bit longer. But if it was to drop here, we have 55K. We don't have any more. So with this particular one, 55K is the bottom of the chart. And we've talked about that fib extension or measured move is 54 to 55. Some charts have 54. So let's go back on this one. Let's look at another one. And this one here. All right. They all have their own version. Here's another one. If we go to the bottom, it's 52K. And I'm not sure where they get it from, which where the data comes from. But basically the data goes into a formula and it gives you this chart. And you can see slightly different in this one. And if we look on this one, I'm supposing Coinbase has one as well. So here, if we do that, on this particular one, it's about 54.5. So the Powell law is a good one, really. And it's telling us it's on the bottom, 54 to 55. It slightly goes up further along, you know what I mean? The price goes up as you go sideways. So for 54 to 55, it is a good position. And that pretty much equates to what we've shown you here. All right. Here is 53.5. With this one here, it's, so yep, that's what I'm looking at. Now, we can also look at Fibonacci in a different, sorry, not the Fibonacci. We can look at this macro chart with another way of approaching it. So let's see how that works out. We're going to use Fibonacci and see if we can get any other potential bottoms. So what we do is from the top to the bottom, we did not get our 0.618 from this perspective, all right? But if 0.618 was to be hit, that price will be 58. So we're using Bybit as a reference. We're using the wicks. 58 is not bad. So we can see how that's working out. What we have is liquidity here as well. We have liquidity here, and if this is a bear flag, which to me sounds good, there's a whole bunch of liquidity that we can take out from here. That's taken ages to get up, so I think that's a good target. So 51, using my standard approach, 6.68, sometimes it's 0.71, could go a bit more to 50. So again, in the same vicinity of 52 to 54. What we want to do now is just, we can do on this one. We use our tools, just see what that gives us with the fixed range tool set. You can see why we have good support there, the value area high. Now what we want to do is, all right, if that's the case, if that's our value area high from that position, what I want to do now is I want to look at this cluster here of price. Here, the value area low is 53. No, sorry, 53.5. So let's drop that down. You can see I'm building a case for this area to be good support. The bottom, liquidity. Now what we want to do is, we did the whole range. Let's just focus around here, see if it makes a difference. It doesn't really make a difference here. And it really doesn't make a difference with this value area high. Oh, sorry. Go ahead. We don't want to extend it. Now it'll give us a value. So for this cluster of price action, we have this value area low, and one can argue that's been tapped. We have that target there, which also lines up with value area low. Look, so if we look at the crosshair here, you can see it matches that there on the right. Well, I forgot to mention this. So if we look at it from that perspective, point of control for this macro range, which is labeled there, that value there is 57. Okay, so we've got to be mindful of that. So if we put a 57, but if we're getting closer, so this is a weekly, daily is a bit better, it's more accurate. Here's the other aspect. We'll get a fib extension from retracement to the 0.382, which is usually about 618 in the other direction. So here we've got 56, here we've got 57, point of control, perfect. Right, so again, looking at that Fibonacci method, let's just do that once more, there to there, actually there to there, logarithmic. So it's not going to work on that particular way, but in this particular way, with the logarithmic, we look at these levels. Perfectly, extension. So that works. If we go to regular, then you can see how that aligns. So we've got a point of control, 0.618 fib, slightly down. We've got the value area low, so it could come down slightly more to 53. You can see how I'm building my case up. If that's our fib extension to get the 1.618, roughly down here, let's just do this for a sec. All right, that's 1.618. If we do it from there, remember we said slightly over, but have you noticed that the retracement, the pullback, is into the fib extension 1? It's another reason we get resistance. So we had I didn't realize at the time, but we got the anchored VWAP, but we also had this fib pullback, just like this one here. When we did it that way, it's the same fib retracement of 1. So just to demonstrate it from there to there. Actually, there to there. No, yeah, we had fib extension 1 there. Yeah, fib extension 1. So if we get that back test, fine. But yeah, I thought worth observing that. So we got that last bit, and you'll notice a lot in many charts. I'll go in close on this one. If that's our resistance, and that is our, let's just do this for a sec, different template. You see beat stamp, value low, value high, doesn't even touch it. And look at the negative point of control for beat stamp. It's weird. Actually, let's have another look, another chart. So that the bad case is 44. 0.5 is 44. So if this doesn't hold, I reckon we will get a strong bounce. And if it was a fail, then I'll look at 44K. But this is a good area to trade. That's my whole point about this. That is a good entry. That is a good entry. Is it the bottom? Well, we think October, roughly October, is going to be potentially a pivot, or July, for the bottom to come in, and we use fib time for that. And I'm sure we'll come back down to retest this, because what happens is when price comes down, it back tests the previous support. If it stands, if it holds, then it's likely to go up. Now I think we spoke about it before. If this is our model 5-wave count, that's great. That's our A. Now if we were to go further down, we'll look at that, and that's our C move. That's a worst case scenario. So we get support, we get our zigzag type of thing, corrective wave, and we find resistance, which this is a strong resistance, or that fib level, take out the liquidity at this level, then that's our A, sorry, that's our A, that's our B, and that's our C. Or C is down here, right? 44, and so on. So we've got these two models. Long story short, we don't know if this is going to be the bottom. We have other levels if that's lost, and then we'll go for all these liquidity levels. Yep, I can't see it going further down than more than that. The worst case scenario is 34. If we were to put the other chart, other fib, let's see what that does. 34 again, 618. So we consider that being aligned. Let's just see where our moving averages actually line up. So if we add in our 200, right now it's actually support. So this time, if we do lose that, we drop. So I was expecting a bounce. The other one is the 21 daily EMAs. EMA and SMA is roughly around here as well. We're slightly lower. So if we lose this 200, we've been playing around with it, showing that it's got weakness. Otherwise, it would have held. We weren't going below it, gone above it, gone low and above. And if we lose this, I think we're going to go down. And I don't think we might get a bounce here, but ultimately we're going to come down to this level of good support and look for a long. Oh, we didn't quite hit Coinbase one, but look where the value is, 57. That's just, I'm not sure why it does that, but yeah, so there, 56, 57, perfect. Remember? Now we'll go back to here. If we were to use this here, this level here, this pivot, because, I forgot to mention this, if this is a wave 1, wave 2, if this is a wave 3, that's a wave 4. Can you see that happening? And then wave 5. So if that turns out to be wave 4 on the macro, you can see where wave 5 is going to go. And then we can do this, 170. So this could go sideways for a while. This is a macro wave 3 to 4 range. We'll be here for a while. Instead of just going pumping straight up, we go sideways, and then bang. These are the next targets, guys, from that perspective. Or we can do this. So if that's the bottom, wouldn't surprise me if that's the bottom. Minimum is that 169, 170. So if you were to get this right, say we get this right, that is 180, 194%. Obviously, this will be a strong resistance for a few trades, but so we can imagine, say price comes down, get a bounce, we'll get an accumulation and up. We might even get a, maybe up to there, comes back down. You know what I mean? Then there's even a cup and handle, really. Get a cup, handle, and then up. And that could be much more bigger. So if we get a cup and handle here, you can guess. So if that's a cup and handle there, depends. If that's like that, 200 something. There you go. Anyway, we speculate a lot, but you can see how my mind works and how we should approach these charts. When we do this, if that's one, does that fit the goal? See, you want, why is this strong resistance? Well, let's just see. There you go, golden ratio. So that's our bottom reference. And potentially, we've got these fibs to be resistance. So if we look at it from this perspective, then we've got these other Fibonacci's as major resistance. But you can see how this 0.618 price comes down to the 0.5, finds support, finds rejection. Now the 0.382 is also resistance. So this is really working well as well with this assumption that from there to there, these fibs make sense. So if we're to use this 0.382, where is it? Let's put 0.382 into this. That's going to be a major resistance. All right, let's put that there. Doesn't quite work out there. But yeah, so that we're gonna see that as a major resistance as well. So if this is try to get up there and that 78 at most and then back down again, it equates to the weekly level. So yeah, bearish guys from what I look at. Yeah, this could, if this just continues sideways, great. Then that could be a bottoming. Most people think that's a bottom. I'm just expecting one leg down more. Take out some more liquidity and it'll just be nice. Bang. And that's your selling climax. That is roughly, that one there is 56. So you might as well keep your eyes on that one too, 56. Being small time frame, it's going to be hard to do that, but from a spot perspective, that's great. From a leverage, it will be hard because we've got a whole bunch of stuff here, right? So leverage wise, unless you, you wait for certain confirmations on a small time frame, it will be hard to get the bottom, but you get the, like I'm talking about the exact bottom. You can enter small leverage and then build up as it bounces up. But yeah, I'm expecting, could expect that bounce and down, further down. Bounce, 0.5618 becomes resistance and down. And then we've got our levels. And then what happens is accumulation, many times it's a channel or a wedge. That's selling climax, AR, back test, and then so on. So then we get this accumulation model kicking Wyckoff accumulation. I don't think it will be a 1, 2, 3, 1, 2, 3 like that, but you never know. So if price goes up and we get a wedge, comes back down, look at the 59, 60K, just around there, support. That is the approach I'll take. So you see how I can look at this chart in many ways. We have our scenarios. Anchored VWAP, I didn't see that before on the Coinbase. Doesn't quite work out on Bybit. So if we were to go Bybit, let's I think we did it, but let's do it again. And that's because of the volume difference on the exchanges. It's hard. The Coinbase is a huge site, so that might be it. What else can we look at? We can look at one thing that we haven't looked at. Just I haven't considered this for a while. Tether dominance. Let's see what tether dominance is doing. It needs to equate. Okay, here we go. So I got that. If we get to that level for tether dominance, say price comes, so we've got it here. Say price comes down. I haven't looked at it for a while. Look at that. Perfect. If it comes down and this spikes to this level, just like these ones here, that might be a signal to enter. Yeah. So look at that dominance. Look at the anchored VWAP, and you know what? It did it. Damn it, it did it too. I just said that I'll give it a go, see what it does. I did this ages ago. And look at that. It freaking worked. Put it there. It's fucking, it bloody works. Dominance. There you go. Oh, just curious. Give me one more sec. Bitcoin versus gold. Damn it. So what's the one? I did say gold is going to go drop against it. So we've got gold. Here we go. I'll post this on X. Here we go. Bitcoin is bouncing against gold. This is the weekly chart. Obviously, this is the Bitstamp. Doesn't matter. We're looking at levels. So if this pulls back at this level, wave 5 on the smaller time frame, gold's going to drop more against Bitcoin, or Bitcoin's going to pump. We saw this as a major resistance. We've got anchored VWAP, major resistance, accumulation, and then up. It's aligned up. We've broken the medium. Yeah. It's too early, yeah. We're probably there at this point. So we see how this comes, eventually gets one more, wave 4, comes back down, get this bullish divergence. Mate, is it too early? Yes, it's probably too early. We get a knockback, bounce, and then up. Bitcoin against gold. That's going to make a difference. Let's have a closer look for trading opportunities right now. We talked about in our previous video. I think we should look at our previous video. We've got this trend line. So we've got the Fibonacci there. So 0.5 along with this trend line is a good support level. Let's add a few things in there. We can say, okay, from there to there. Oh, we got our value area low as well. So that is a good position to long. Previous support, maybe a little wick, regain, and then bounce. And then we use the 200 as a resistance to further down. So if price was to come, so we go and get another tap down. We get maybe a bounce, knock down here, bounce, then we hit our trend line, and we are stuffed. So there's going to be a bit more action till April the 12th, all right, roughly around there. I'm looking at this type of play, 200 moving average, trend line. If it comes down and retest there, that's your last point of shorting, guys, and beautiful trade. And then maybe get a bounce, capitulation even further down. But here's a good position to have a good look for long. You're having your opportunity to short here. I don't think this is going to take off and touch this level at all. I doubt it will go there, but that was my taking up the liquidity. So you can see how I'm approaching this. Let's go on the smaller chart time frame. Here it is. We've done it here, and so on. So we have this bottom trend line. We've broken this trend line, so we found the support. Now we've broken it. Value area high, act as a perfect resistance. Now we've got these fibs, and I was short. Here is where we're going to look for a long. There's not much confidence, to tell the truth. Value, yeah, we might get a bounce, but we can still find a resistance. Now here's a 21 moving averages on the daily, and you can see how that is becoming resistance as well. And then we spoke about this many times of anchored VWAP. So where are we here? Anchored VWAP. That was our main entry to short. Some charts are better than others. This is not quite aligned with Binance. With Bybit, it's better. So if we were to do it from this one here, Bybit, I was actually wrong point. Let's go to 4 hour. We're talking about this one here, right? That was a perfect position to enter the short. There's other one here as well, but that didn't happen. There was a band. Sorry, guys. Target for a good long. If it goes up 20%, that's 38%, even 20%. Guys, like it's a great trade. Even up to there, it's what, 30%. Good leverage trade entry, beautiful. And if it could go up to the previous high, that 21 moving average is going to play a resistance. This 200 moving is going to play a resistance. And we have, that's not going to help. Maybe that, like the 220 moving average on the monthly with a, actually look at that, perfect there, right? So if we use that there perfectly, that could play a role as well when price comes back up. These are all part of the approach. Trend line, and that looks like a channel as well. If we're to do that, that looks like maybe a channel. Yeah, close enough. Beautiful channel. If it drops there, we'll look for the bottom of the channel, which is roughly around there. Depends how it comes. If it comes down, bottom of the channel, that'll be a good position to buy, and then up goes. So we're looking for this type of scenario. If price comes down, capitulates, and we get that and bounce, but it doesn't really do much, then we got this level, an extended fifth wave. So that is our reference point. So wave 4, and extended wave 5, because wave 1 is short and wave 3 is standard. That's a standard. So wave 5 could be 1-to-1 or further. And that aligns with our other fib retracement. That's it, guys. Please give me a like and share, and I'll talk to you soon. Cheers.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.